I'm Michael Fox, the publisher of the Prospector News, and this is the Metals, Money, and Markets Weekly for April the 26th. And I'm joined again this week, as I am always, every week, by the mercenary geologist, Mickey Fulp. Welcome back, Mickey.
Most always 52 weeks a year. Sometimes one of us is missing, but we're pretty good at doing this every week. So I am doing well, Mike.
That's a very good thing. Unfortunately, the precious metals this week, they had a bit of a downturn this week to settle off the long run that they had. Let's take a look at them.
Well, I think everything probably got overbought, so came back to reality a bit. You know, we were talking about would gold test 2,400 this week. Now the talk in amongst pundits, will it test 2,300 in the coming week with the Fed and various other things going on macroeconomically? Gold closed at 23.39, down over 2%. Silver came back to reality a little bit, lost $1.45 to close at 27.15. Platinum lost $18, closed at 9.12. And palladium, for the second week in a row, took a big hit. It closed off more than 6%, closed at 9.38 this week.
Yeah, the precious metal side of the ledger didn't look particularly good, but copper still had a bit of a bid under it this week.
It did, driven, of course, by the inflation numbers, I'm sure, which came out midweek, closed at 4.46. Up another 4 cents. Chinese imports are driving this market. Supply constraints. We talked last week about production shortfalls in Chile. And the big news that hit the copper market this week was a proposed merger between BHP taking over. Yes, really, it's a takeover of Anglo-American for their South American copper production. Be a pretty big deal, about $39-40 billion.
Yeah, the bigger's getting biggest, and it will be a major deal, and I'm sure there will be some spin-offs that'll come out of that, as there always is. So it'll make the copper market a pretty interesting place over the next little while they sort that out.
It's much more than copper, too. So BHP is mainly a gold producer, does produce some copper, but more metals involved than just copper here.
No, that's true. Let's take a look at the energy. Slight bid under West Texas this week.
Yeah, there was an inventory draw back in the U.S. to the order of about 6.5 million barrels. That helped drive the market. Let's look at the numbers. Rigs -6, production 13.1 remains flat. Where I mentioned inventories, imports were the identical amount, coincidentally, at 6.4 million barrels a day. Refineries are hanging in there, 15.8 to 15.9. All this conspired to raise the oil price up 0.5%, closed at 83.65 WTI. Look at some of the factoids that we came across this week. The long-delayed TMX pipeline, which is supposedly going to deliver oil on May the 1st. Turns out the Canadian government has not given approval for all segments, so that startup date is now in doubt now. Gasoline inventories remain low, and so gasoline was up another 4 cents to a year-to-date high of $3.66 a gallon in the United States.
Yeah, our gas here in Prince Edward Island, it took a jump this week as well, and it's the highest point that I've ever seen it here. So we're feeling that pressure as well. But I have to say, leave it to the Canadian government to own a pipeline that they haven't permitted when they're the ones in charge of permitting as well. So government incompetence at its finest.
and announcing that they're going to start delivering oil to the port in Vancouver on May the 1st. They announced that about 3 or 4 weeks ago, and now that is in serious doubt.
Yeah, well, nothing, unfortunately, from this government surprises me anymore. Uranium, it's continuing in its correction.
Yeah, it closed down $2 on the week. It actually dropped $1.75 on Wednesday, which is the last day I have a price on it. Closed at $87.
Yeah, it's like the precious metals. It was way out ahead of itself, so it had to come back to a little bit more of reality, that's for sure. Let's take a look at the money markets. The U.S. dollar kind of got a little over its skis last week, and it's come back slightly, but not to the same extent as other things.
Yeah, there was hardly any movement in Forex this week, or at least the ones we track. The dollar index lost 13 basis points. That's a tenth of a percent. Still closed about above 106 at 106.01. Euro gained 5 basis points to close at 107. The loonie gained about 5 basis points to close at 73.18. 10-year bond hit a 5-month high yesterday at 4.71%. Backed off that a little bit today. It closed at 4.67% for a 5 basis point gain on the week.
Yeah, the Treasury keeps looking like it's going on a very slow march towards 5%, doesn't it?
Yeah, we'll see what happens. It was as high. The month average for November was 4.8%, so it's got quite a ways to go to get there.
Yeah, true that. Markets, they actually had a pretty good week this week compared to the past few.
The markets had somewhat of a volatile week, down then up. A lot of the down was driven by a very poor GDP number, 1.6%. That surprised the market. They were up today, up slightly, but we basically had mixed numbers all week. Durable goods and home sales were down. GDP was down way below what was expected. Today, core PCE, personal consumer expenditures, remained about the same. So all that tend to give the markets a little push because they've been down quite a bit over the last 3 or 4 weeks. So Dow closed at 38,240, up almost 1%. S&P 500 got above 5,100 again, and actually closed at 5,100 on the week for a 2.7% gain. Volatility, all in all, today dropped off. It closed at 15. NASDAQ was the big winner and, of course, drove the Dow, too, in some regards. It closed up at 15,928 on some robust earnings from the tech sector. So there are increasing concerns with the U.S. economy. We've been talking about this for a while, but all of a sudden it's become once again the word of the week, and that's stagflation. Before you started, Chris and I were talking about stagflation well over a year ago. So that comes right in with our Rolling Stones song today, and it's from the great album, double album called Exile on Main Street. And the song is a Keith Richards song called Torn and Frayed. And really, that is the real concern amongst the working people in the United States. This economy is torn and frayed. And really, it's been driven by both personal and public debt, paying all these expenses. Personal credit card debt is at an all-time high, and we all know what Congress and the presidency are doing with printing dollars, and that we don't have.
Yeah, unfortunately, that's the way it is. I've been figuring that it's been, being held together by bale wire and duct tape for a while. So that's a good analogy and an excellent pick for this week's Rolling Stone song. However, our Canadian cousin caught me by surprise. We had a big jump in the TSXV this week.
Yeah, we had much higher volumes, about 1.5 to 2 times what we've been seeing in this very low liquidity paradigm we've been in for a number of years now. But that tends to drive markets up, and the TSXV gained 20 basis points, up 3.5% to close at 587. And that's exactly where it was 2 weeks ago. So a move up after a move down. I think a lot of the move today, and had a nice game today, was probably driven by a trickle down from very boisterous Newmont earnings, which far exceeded consensus on the street.
Yeah, that would definitely. Newmont's a big player up in the northern BC areas, referred to as the Golden Triangle. So a win there would definitely grab a Canadian's attention in a hurry.
Well, we have to look at Newmont. It's a multinational gold company with most of its production coming from the U.S., but also significant production in Peru, production from Indonesia, production from Western Africa, and probably at the bottom of the list, I would think, is the mine you're talking about, which they bought from Newcrest, which is Pretium in the Golden Triangle. So I'm not sure much of it had to do with Canadians buying in, but people see earnings with the world's largest gold producer, and they want to be positive. People are basically optimistic, so that probably generated some buying today, in my opinion.
Yeah, that'd be a fair consensus. I get the sense that the precious metals people are looking for reasons to buy, and that would certainly give them some. So we've got to pull. Oh no, I'm jumping ahead here. We've got to take a look at what the data points are for next week.
Yeah, pretty busy week. We got consumer confidence on Monday, the manufacturing and services PMIs this week. We've got the biggie, which is the FOMC meeting on Wednesday. Pretty much know that there will be no interest rate movement, and we've been saying this for a while. We don't think it's going to happen in 2024. And then on Friday, we have non-farm payrolls. And we know that the government cooks those books, but bear in mind that any increases are going to be government jobs and part-time jobs. And I saw a statistic yesterday, year over year, there have been 2 million private sector jobs, all in all, lost in the United States.
Yeah, it's, if it wasn't for government jobs, nobody'd be working, I guess. So we have a poll question this week.
We do. What is the most powerful organization in the United States of America? 4 choices as usual. First one is the Deep State Department. Second is the Federal Reserve. Third is the Military Industrial Complex. And number 4 is the Uniparty. And anybody that follows what's going on in Congress over the last week or so knows that the Uniparty is in control with billions of dollars sent to fight wars in foreign lands where we have no dog in the fight.
Well, my answer is the military industrial complex. That's what's been driving everything for the last 50 years. So why should it change now?
So I'm going to say the Deep State Department. So that's all the secret agencies, and we're seeing this play out in the United States now. And certainly the military industrial complex can be considered a part of the Deep State Department too.
Yeah, that's fair. We're probably one of those situations where we're both right. So that's it for this week, and we've got lots of data points, and the Fed heads are going to talk next week. So lots of things that could roil the markets coming forward. So we'll see what happens, and we'll see if gold can hold its 2,300 to close the month out.
Okay, Mike. Thank you.
You take care, Mickey. The Metals, Money, and Markets Weekly is syndicated by our friends at Kitco.com. Mickey Falp and his musings can be found at mercenarygeologist.com and on Twitter at mercenarygeo. And I'm Michael Fox, published at theprospectornews.com. Thank you for listening, and please join us again next week.